Good afternoon, everybody. Going to go over our Forex trades today for Monday, October 5th. We had we had 4 trades. Each one was 30% of normal size. Pulled out a total of 18.3 pips on a size-adjusted basis. On a non-size-adjusted basis, that was 61.4 pips. First, just want to go over the economic news from today and actually from Friday, because we didn't do a video Friday as we didn't trade Friday morning with the non-farm payrolls. Which is the biggest number of every month. So non-farm payroll came out at 142,000 for the month of September. Estimates were for 203,000 new jobs to be created. That's an enormous miss. Unemployment rate, I believe, stayed the same, if I remember correctly. The Fed Fund futures for the next rate hike, October is basically 0%. December is under 30%. The next month that has a 50% chance or higher of a Fed rate hike is April of 2016. So we've been saying all along they're not going to raise rates this year. The only reason to raise rates is to normalize and create good inflation. Obviously, they don't want to do that. Since the terrible number of non-farm payrolls, the market has risen. It initially went down Friday morning, proceeded to rally Friday afternoon, and has rallied this morning as far as the stock market. So equity markets, like I said, are up and have been up around the world. Reason being, and it's amazing because years ago, before the financial crisis, if that number came out, equity markets would have been getting killed. The reason being is the street is telling the Fed, no way can you raise rates, and the street wants more QE. We have some analysts coming out and saying the ECB is going to increase their QE by 120% in the coming weeks and months. At least that's what they're expecting. And we're getting a lot of talk on the street today that there was more economic news this morning that was poor, and we're getting talk on the streets today that the Fed's going to institute another QE, that they cannot raise rates. And it's amazing because we've been saying it all along. If they're not going to raise rates to normalize and create good inflation, then they basically painted themselves in a corner, and the market's going to force whatever is going to force their hand, and not only the market but the global economy, and the hand's going to be forced to keep interest rates extremely low and possibly even do QE, because if they don't do QE and they don't raise rates, this market will go down, and there's no question about it. The only way the market goes higher is if they do a QE or they start to raise rates on a slow basis and move forward. Not only was the number terrible Friday, workers, they were paid less in the survey. Not only paid less, they actually were given less hours to work per week. That's how poor the economy has gotten over the last few months. So it's evident that the economy is slowing down, not just here in the United States, but also around the world. The labor participation rate is at a record 94.6 million people. That means 94.6 million people are no longer in the workforce. So, all right, you break it down a little bit. There's some people that are under the working age, and there's some people that are retired, right? So obviously they're in that 94.6 million, because if that was the true number of unemployment, it would be upwards of 30%. Even the way the government calculates it, where that number is coming from, that number is including the people that no longer are eligible to receive unemployment benefits. The government just assumes that they either hit the lottery, have a rich uncle, rich parent that passed, and they inherited money. Or they saved so much money that they no longer have to work again. Doesn't matter how old they are, even if they're 35 and can't get a job and no longer receive unemployment benefits, they're just a wealthy person. So the government doesn't even include them in their statistics. That's how they're saying the unemployment number is 5.1%, which is absolutely absurd. So we've been saying all along unemployment's upwards close to 20%, 18, 19, 20, 21% in that vicinity. Not going to know for sure because the government doesn't tell us exactly the amount of people. There's been some analysts, some economists, well-respected economists, that are saying it's upwards closer to 30%. When that number came out, the 10-year Treasury actually went below 2% At one point, we saw it as low as 1.92%. I believe on Friday it closed at 1.99%, just a hair below the 2% level. Factory orders came out on Friday as well. That was pretty much overlooked because of the terrible non-farm payroll. But that came out with a negative 1.7%, which was worse than the estimate of a negative 1.2%. So it was a half percentage point worse than a already terrible estimate. So just not good news there at all. Excuse me. Goldman Sachs on Friday, after the numbers, lowered their third quarter GDP. Yet again, it was the second or third time last week that they lowered their estimate for the third quarter down to 1.9% from 2%. And I think we did our video on Thursday. The Atlanta Fed GDP had cut their estimate, or their computer model cut their estimate by 50% down to 0.9% growth. So they're still a whole percentage point above the Atlanta Fed GDP now number or estimate. This morning we got, what did we get this morning? 1 minute. Where is it here? Okay, this morning we got not a big number. We got U.S. market PMI, which came at 55.1 versus an estimate of 55.6, so that missed. And we also got ISM non-manufacturing composite, came out 56.9 versus an estimate of 57.5. More terrible economic data came out this morning. And Bank of America, matter of fact, they lowered their estimates for the S&P 500 to a target of 2,000. So things are not looking good anywhere in the economy on a, when really looking at it from a perspective of not having to influence it one way or the other, or influence someone one way or the other. Just giving the facts, it is not looking good. Let's get to our trades. So we had those 4 trades, like I said, pulled out 18.3 pips. All of them were 30% of normal size. First one you're looking at here is US dollar, Canadian dollar, 1.32439. We were short. We ended up covering, by the time we got out of everything, because we pieced out, it was an average price of 1.32335, picking up 10.4 pips or size adjusted 3.1. Swiss franc, Japanese yen, we were short this 122.673. Covered 122.619 for 5.4 pips or size adjusted 1.6 pips. Again, we pieced out and we could see how it came in for us nicely, and we were picking some up, and then it reversed. The last piece ended up pushing on, so didn't really make all that much. We got out of the first few pieces a little too quickly, as you can see, obviously. Pound US dollar. This one, these next two, actually, we couldn't piece out because it happened while we were sleeping. We were long pound US dollar from 1.52154. We had our stops in, obviously. We were risking down these levels. We were risking down around these levels, if I remember correctly. Yes, down around this 5160, 5170 level. You can see what it did. It consolidated after we went long, and then overnight it ran. We were originally looking for about closer to the 1.5250 if we were still awake and able to piece out. Unfortunately, it didn't. So what we then do when we're not going to be awake and watching it, we'll just lower the profit target. Look for 20, 25, 30 pips, something like that, depending on the currency pair. Pound US dollar is not as volatile as the next one, which is New Zealand dollar, Japanese yen. So we look for approximately 20 pips. We sold 1.52350, picking up 19.6 pips or size adjusted 5.8. You can see what it did. It did spike higher. It went all the way to 1.5243, so another 8 or 9 pips there, 8 and change. If we were able to piece this out, we probably would have been piecing out. Maybe we did better this way, because the last piece we would have been selling at break even. But then again, maybe we might have captured a little bit of the spike. Hard to tell. This one, New Zealand dollar, Japanese yen, we definitely would have been piecing out, obviously, but we would definitely have done better by piecing it out because it wasn't a spike. You see how the pound US dollar is just really just a spike up in about 30 minutes. where New Zealand dollar, Japanese yen was a move up over several hours. Again, unfortunately, it happened while we were sleeping. So, and this one is more volatile, the pound US dollar. So we were looking for, a little bit more on the profit side. So we would be looking at 25, 30, 35 pips. So we put it all in right around that 25 pip number. We put it in at 77.90. Our feeling about figures of 78, okay, 78, 79, 80, 70, the even numbers. So we put it in 10 pips below the even number. So we picked up 26 pips, size adjusted 7.8. And you can see what it did. It went to the figure, ripped right through it. This is all while we're sleeping. And then it just ran all the way up to 78.50. So, there's 60 pips there. So we would have definitely been piecing this out. Eventually hold the last piece, whether it's 20%, 10%, 30%, whatever. We would have moved our stop to break even. Probably would have eventually raised that stop to right around the figure of 78. Or maybe even got out upwards of that half figure of, see if we could get through it. And if not, maybe put the stop around 78.40. So we would have for sure picked up more money if this happened while we were still, in front of the computer. Unfortunately, these things happen. It happened at I don't know, this move started around 3 o'clock in the morning and ended around 6 in the morning, so we get in the office around 7. So it happened while we were not, but we'll take it. So 4 trades, 18.3 pips on a size adjusted, non-size adjusted 61.4 pips, and that's it. So if you're still trading now, good luck. If any signals come out, they'll be coming your way. Assuming we get some action later tonight and tomorrow, we'll do another video, and have a great rest of your day.